Let's talk earnings then. LIC Housing Finance, it's been a disappointing set. Let's welcome on board Vinay Sah from LIC Housing Finance. Vinay, hi, morning. Let's start with what were the growth drivers behind the increase in first the profit and NII, and I'm going to come to the asset quality pressure in just a bit.
Yeah, several things have contributed. The first thing is that during last financial year we had lending rates increase to the tune of 70 basis points, which we had done in 5 tranches. The disbursement growth overall has also been up by 12%, and the project loan, developer loan growth also has been fairly well, which has also contributed to the higher interest income. The exits have been on the lower side, so that also has contributed to contributing to the increase in interest income.
Right. But what about the asset quality, especially given the developer loan book? Because as I see, there is some pressure coming in.
See, in simple terms, if I say, we were also concerned and we have analyzed this. Much of this has happened because of the aging which has taken place from the accounts which were delinquent. They went to NPAs, more of them. This quarter suddenly we find that there was a more 40 basis aging which happened, and the accounts went from delinquent to NPAs. So that is one. The second is project. You were saying project, in fact the ratio has come down from 7.4% odd to 6.9%, if I take as compared to Q4 as compared to Q3. Going ahead, I believe that this is a temporary phenomena. We have formed teams and groups, and then probably recovery teams which will go on very aggressively to see that this position improves in Q1 FY2020.
Right, Mr. Shah, there's also been an increase in the provisions this time around. What is the outlook on your provision coverage ratio?
Provisioning this time has been done on the basis of the NDAS, the ECL model, and thereby also for Q4 the provisioning is to the extent of 105 crores as against about 69-70 crores quarter on quarter. Going ahead, I think that most probably not much of an increase would be there, because this ECL provisioning takes into account the expected credit loss, which is sees the historical experience also.
And what is the margin picture looking like given the fact that there has been rising funding costs?
Cost of fund that we have experienced is on an average analyzed basis is 8.49 as against 8.31, but the yields have gone up. Currently they are at 10.53 as against 10.12 last year. The spreads have increased from 1.81 to 2.04. Going ahead, I believe probably there should be some stability as far as cost of borrowing. It may be around the same levels or may come down also. That should help us increase our spreads.
Can you highlight the disbursement and loan growth trends and what you are witnessing?
Overall growth was slightly in excess of 7%, but the good thing is that our individual home loans grew by more than 18%. Going ahead, the company is targeting for the year disbursement growth rate in excess of 15-16%.
How exactly is the borrowing mix looking like for next year?
We basically have been borrowing through NCDs, bank term loans, bank lines, CPs, some amount coming from our public deposit, some NHB refinancing also. So going ahead also these things will continue. For us, if we see whole of our borrowings Still NCDs constitute about 74%. And if the rates are favorable, we would go in more for NCDs because we believe that long-term borrowings suit the type of business that we do.
Okay. So what would you say would be the growth plan and focus area for the next year?
Growth plans, housing, as I said, the company would be targeting for disbursement growth rate in excess of 15%. Portfolio loan book growth rate again in excess of 15-16%. This year, in fact, our portfolio has grown by 16.2%, one of the best in several quarters. So this is what we going ahead we would be targeting. Last year we opened about 23 new offices. We went to new geographies also where we did not have a presence. Current year we are again opening about 9 area offices, the basic marketing offices, and 2 back offices, one at Varanasi and Guwahati. Last year we had launched a new channel of direct sales known as through direct marketing executives. We are looking forward to fortifying that and getting a good business out of this channel also.
Okay, all right, Mr. Sah, appreciate your time and thank you for joining us.